what's interesting here, as I mentioned earlier, we really wanted to tackle, I think, the biggest issues in the morning. We talked about the economy, we talked about the future, and then, banks, which are 36% of the market. We had Hui from ACB. Real estate, which is about 15% of the public equity market, but I would argue about 150% of the market sentiment. It's really important. And so as we have everybody, flying in to Vietnam, we wanted to make sure we kind of tackled these two issues head on. And so we're very fortunate to have Pham, who's the CIO of Nam Long Group, NLG, which is a listed company. Spent 5 years with NLG in 20 years, 5 years as Group CIO and 20 years of investment and finance experience. And so for some of the folks in the audience, maybe a quick intro to who NLG is, and then we can talk about, we'll go to the first question that was not answered by the other panelists. Thank you very much for joining.
Sorry, so we've been there about 30 years. If you look around, not so many real estate developers actually been around for that long because of the up and down and cyclical of the business. Our mandate, quite different from others, if you actually pay it close attention, is that we focus on the first home, or we call it the affordable to mid-end segment. We majorly operate in the south, so we started in Ho Chi Minh cities, and right now we have the satellite cities of Dong Nai, Long An, and Cần Thơ as well. So we're also planning to move out to the north, which is Hai Phong. This is the first project. We haven't launched anything just yet. Hopefully, we're going to be by next year. So if we want to stay affordable, if you look at the location itself, it's actually suggesting a certain trend in the real estate right now in Ho Chi Minh, is that if you want to stay affordable segment, you can't stay in Ho Chi Minh. You have to move out of the satellite cities. We started with the first project somewhere in District 9, District 2, with a similar price per square meter is about 20 million per square meters. And right now, we have the two remaining projects in Ho Chi Minh cities considered as one of the most affordable products in the market at the lowest or the average price of 49 million per square meters. Of course, we scaled down our apartment and make the absolute value affordable enough so that, when we come to affordable, we're saying about 30% of disposable income of the couples to buy our product. So we try to squeeze out the area of the apartment together with the price per square meters and making it about 2.5 to 3 billion VND per house. So these will comprise the majority of our products. And that's where we are.
Okay, so we have our list of questions, and we'll kind of have NLG, but also as a proxy for real estate. But let's get to the question that was just asked. So I'm going to paraphrase poorly. By the way, help me if I get this wrong. So basically, what is the sentiment, and when do you think real estate residential will come back? Is that? Okay, and so maybe expand it beyond what your footprint is, so to speak.
Sure. I think in order to answer the questions, I think a lot of the audience here is actually from overseas. Basic explanation in terms of what difference between the local market compared to the market that you are familiar might be helpful. So one key difference with Vietnam property market is we are still in the pre-funding market. As compared to Australia, UK, Singapore, it's a post-funding market. So what it means is we actually can, as a developer, we can pre-sell the product and get funding from customers progressively along the development of the project. So together with the bond market that everyone is hearing the headlines around, so when you can issue easy, bond, easy money, easy use of fund, that means you get the money and you do whatever you want. Together with the pre-funding market, you basically doesn't need a single dollar from your equity to buy land and to sell properties. So that era has been disrupted in 2022. I think it started with the auction in Two Team. We participated in the Two Team, and we thought that if we won the auctions, our selling price per square meter for that apartment is 130 million per square meter in District 2 or Totium. But then with the land price of 1 time or 1.1 time the auction price, and the auction came out 7 times. The successful auction price came out 7 times. So that's where the crackdown of all the fundings. So the pre-fundings from the bonds and the pre-funding from the pre-sales as well. So that has been disrupted for the last 12 months. And that's why the headlines of the bond, the corporate bonds, is flying around everywhere that you see in terms of the real estate. So to answer your questions, when is that going to be picking up again? So in 2021 and 2022, whatever policy that come out from the government is with the purpose of tightening the lending or prevention of the money going to the market so that it's cooled down. And during that period, developer missed repayment of the bond, and then pre-sales couldn't be delivered to the client, so the client asking for refund of the money. So that is 2022, and the government is actually forming a task force at the end of 2022 and learning what are the reasons. Perhaps a lot of people who are familiar with the local market already know this, but in whatever policies that come out in 2023 is to help the market. So what it came out was extending the durations of the bond should it come to mature. Extending the investment timeline of the project should it come to deadlines. So with the duration, with the intention and with the direction and the policies being introduced, the residential market should be picking up earlier than what we expected. I wouldn't say any particular times, but I think that the key changes going to happen is somehow at the end of this year when all the related laws to be revised. One of the very important law, which is the land law in 2023. Should the direction of the residential market goes, it all depends on what it changes in that law.
And so I'll add to that, and again, not on the script here. There have been many policies that you mentioned that have been introduced to create stability. So extending maturities of the bonds, and you're saying the one that's on land law. Is this kind of multiple solutions, kind of the government seeing how much do they need to intervene, and they'll do it in baby steps as opposed to just creating one big, huge policy?
Yeah, so I think the government knows what are the issues that within their interventions or the power. Certain issues, they actually can intervene immediately. For example, extension of the credit, extension of the investment timelines, they can do it immediately. You can see that via Decree 10, right? But there are things that they cannot change, but have to wait for the new law to come in, which is the land law, how to calculate land use fees, what are the social housing obligations look like. Should it need to change, the law have to come along as well. So what they have done so far is prolong the issues, for example, the financial obligations, prolong the investment timelines, and wait for the new law to come. It's similar to the COVID-19 when we shut it down to wait for the vaccine to come. When the vaccine comes, we open the economy again. So it's quite a similar approach.
So getting back here, so, are there other government policies that need to be enacted, or is the land law kind of the one thing that you're waiting for to see the bigger direction?
So from a developer perspective, when we're talking about the key issues of a project, there are two main key issues right now. Social housing obligations.
By the way, explain maybe what that is.
Social housing obligation means developer who has a project that more than 5 hectares have to reserve 20% of their land to develop social housing. What social housing means is the developer has to develop that social housing and sell it to the stipulated buyer who qualify the asset test as well as the income test in order to buy the social housing. In return, a developer is exempted from the land use fees that they need to pay for that portion of the land. So in that context, we need to know what the social housing obligation would be applying to a particular project. Can we actually exchange it in terms of the land use fees? Instead of being free 20%, we can pay 20% of the land use fees of that portion. The money go to the government, and the government go and build the social housing somewhere else. Why is it important? Because without the clear answers or the clear requirements on the social housing, how can they approve on the master plan of a project, right? So that is one of the key. The second key, second issues right now, most of the developers, regardless of local or foreigners, is the land use fees calculations. So there are different approaches in terms of calculate fees, but 10 consultants come in with 10 different numbers. So which one is the correct one? So we have to wait for the law to dictate how to calculate the land use fees. So these are the two issues that need to be awaited for the new laws to come in.
So as you think about it, you know, one of the things the gentleman earlier asked about kind of the corruption and what we had read and heard and spoken to other folks is that it wasn't really a policy, but the kind of the slowdown or kind of the freezing of the approvals was having a huge negative impact. And so I guess one of the questions is, it's not even so much a new policy, but have you heard and have you felt that the government has actually pushed the local authorities to approve new projects, and is that as good as actually a new policy?
Yeah, they can push whatever they want. It's just that they come back with, you know, you can help or giving an approval as long as within the laws. And the law itself has the issues of overlapping. So one law stipulates that you can, the other one says no, you cannot. So how they actually giving the approval without really having a clear guidance on what is actually can and cannot. So that's part have to be clear in the new laws that are coming too.
So does that mean you kind of understand if the bureaucrats are hesitant to approve things because they're not sure what to do?
Yep.
Okay.
Yeah. But recently we can see that the very clear trend that after all this effort, the government is actually giving a lot more effort to actually giving out the approval. Two areas. One is the social housing. Because they have a 1 million social housing by 2025 mission. So whatever related to the social housing licensing, they're giving out quite quick. So even Nam Long, we actually have recently obtained the license to sell for social housing in our project in Kantar and the other one in Binchant. So if related to social housing, documentation and approval were pretty quick. Second trend that we see is that they was very afraid of what they're going to do is right or wrong because the law doesn't really clearly state that. So what they have done is they granting the land use fees approval, but in return, the developers who receiving the grant of the approval, making the commitment, should the calculation is wrong later on being inspected and it's going to be more, the developer will willing to pay the additional. So by doing that, they be able to give out the approval without being the risk of detriment to the assets of the government. So we can see that there's a way, there's a will. There's a will, there's a way. So that's what we see right now.
So, you know, one of the things that happened last year in kind of all of these things are related is, a lot of individual corporate bonds were sold to individual investors and maybe didn't necessarily understand what they were. And then when they kind of figured out what they were, they said, this is not what I thought it was. And they panicked, which created a problem. And so then the banks were hesitant to lend and the real estate companies couldn't refinance. Not saying the next problem will be the same, because it never really is. But as you think about it, interest rates have come down 150 basis points. Mortgage rates have come down, maybe not as much just yet. You know, how does what's happened in corporate bonds and now mortgage rates, does that help you when you think about financing costs or financing projects down the road? Will you finance them the same way 3 years from now as you did 3 years ago, and maybe not just for your group, but for the real estate industry as a whole?
It's interesting questions. I often hear a lot of blaming on the bond as a tool itself is the evil of everything that's been collapsing in the real estate, which is not true at all. There's a lot of investors who buying bond doesn't know what it is. But there are also a lot of home buyer who buying home and doesn't know what it is, right? Because we are in a pre-funding market, we do a lot of pre-sales, and nobody regulating what pre-sale looks like as clearly as it should be, so that every developer would understand the same, no? So in the creative minds and flexibilities of their own, there's a lot of developers doing the pre-sales way before the licenses that allow them to. And recently you see the headlines of how people actually being arrested because of the deceit of thousands of buyers. It is because of the pre-sales that they can just collect the money without the licensing to sell something. So it's not just a bond, it's actually the pre-sale itself is actually creating this collapse of the sentiment in the real estate. So what have it done in this crisis that might the industry is moving forward better is that even now my mom knows what the SPA look like, sales and purchase agreements of the real estate look like. Before that, she doesn't care. A deposit contract or anything contract that she signed and pointing to a house that she buys, she just buy it. But right now, she's very conscious of what she's buying. So together with the bond market as well. So for us, we haven't issued bond much to the retailers whatsoever. Most of the bonds that we issue, which is half of our debt, is to the insurances, and banks, or certificated and financial investors. So we're not really impacted because of the crackdown of the bond insurance. So from our perspective, we just recently issued a bond to a bank, a 5 years fixed, 9.5%, compared to, let's say, 3 years ago when we do with Vicom Bank Securities, 500 billion, 1 year fixed, 2 year floating rate on the average of 10.5. So in terms of the cost of the borrowing right now we're doing, at the moment, nothing changed much for us. From the selling perspective, it helps us a lot. Maybe we are in the mix of the bad sentiment right now, but when we go out and pre-sales now, people knows and confident that what we sell is backed by the legality of the project itself. In the SBA, we have the license, the permits, the numbers, and everything. So people start to differentiate what we offer compared to our peers before. And previous session mentioned about how hard it is to get land now. It's so hard to get land, where do you introduce a new product? So it's not going to wait for a while. And that's the reason why we can see that in the next year or so, that the one that having the proper product to be introducing to the market will be the one who benefits from the interest rate going down and everything that the government is doing right now.
And so, and forgive me if I'm wrong here, I think, as I understood it, Vietnamese developers are only allowed to take in a deposit once the foundation is built. Is that accurate, or is that a inaccurate statement?
So we do pre-sales is that we can only collect up to 50% of the units that we sell before handover, because we have the foreign component in our project. If you are a local developer, you can collect up to 70% before you hand over. In the requirement of having a license to sell, you need to complete the foundations of the apartments. For a landed property, you need to complete the common infrastructures before you get the license to sell. However, there's a lot of pre-sales happening before that. So we call it deposits. We're not qualified as sales and purchase agreement just yet, but we start to collect deposit first. And we're going to collect up to 30% before we qualify for the sales and purchase agreement. This is where every developer is doing differently, the first 30%. Some go even beyond the 30% and up to 95%.
So the rule is clear. It's just some companies perhaps work around it, and unfortunately that's what's driven sentiment down, because then the project didn't get built because of the financial issues. Is that correct?
That's right.
Okay. So to the question about sentiment, do we need to see more projects completed? Is that what's going to get people, will that restore confidence, or is that 2, 3, 4 years down the road? And I guess the follow-up question, it's a leading question for, I think, your firm, but I'm also assuming it's not a beta story, meaning different firms who have different projects and different behaviors will recover earlier, and so you may not see every firm recover at the same rate.
Yeah, that's right. So you can see that a lot of people talk about approvals, but every approval is different at different stages. A lot of developers who pre-sales with the wrong master plan and trying to correct the master plan by getting the approval, that approval might never comes. So pre-selling too early or pre-selling something that is not even rightfully and predictingly in terms of getting the approval along the way is a risky game, very risky.
Now, I have to ask this question because we talked about it earlier, and we get it whenever we talk about real estate, particularly if someone uses the word crisis. How do you think about, or do you know, people ask us all the time, they read about Evergrande, they read about Country Garden, I think it is in China, and they go, oh, well, that's what happened in Vietnam last year, and it's like, no, it's completely different, but how do you think about that? And you get same questions from either foreign investors or from local home buyers who read about a headline in China and then go, this is what's happening here.
Yeah, all the time.
Okay.
All the time. I think the headlines are similar. If you see the headlines, is you know, the mispayment of the bonds, the 3 red lines in China. So basically, it's the same with Degree 65 over here. Pardon me for the jargon of the national issues. Degree 65 talking about the conditions to issue bond. So it's similar to 3 red lines in China. So if you're talking about the credit crunch, the bond issues, the headlines are quite similar. But if you're talking about the real estate industries, it's very different. I guess the audience here, some might even familiar with the Chinese market even more than myself, but in our observation, say, in China, there's no land issues for developers. What does that mean? You can get as much land from the government as you want, as long as you pay for it. And you can do as many apartments, many condos, many landed property as you want, as long as you pay for it. Here in Vietnam, land is everything. We can't get it. The process of acquiring land from agricultural land or non-ready to develop land and convert it into a residential land is prolonged and very long. And you don't know whether you actually can do it in the, in the timing that you actually want to. So if you look at any countries that doesn't have land issues, price appreciation in terms of real estate is very low. And that's explained why in Vietnam, we have a lot of price escalation in terms of the finished product over the period of 10 years. You see, there's a lot of, in Ho Chi Minh, there's a lot of empty land sitting there, but the process of converting that land into a residential market is another story. So fundamentally, very different in terms of the land. And that's why China has oversupply issues. We have shortage issues. So very different. We don't have to talk about demographic-wise, it's different. But one more point, which is the infrastructures. In China, infrastructures is way ahead of us, and we're only starting. And valuation of the land is very much rely on infrastructures, and we only started. So in terms of long-term, real estate here is still in a good hand. And you shouldn't buy any real estate developer shares if land is not an issue.
So basically what you're saying is, if you want to buy real estate developers in Vietnam, look at their land bank. Is that what you're saying?
Yeah, of course. Land banks. Land banks that reflect things on the book rather than on decorations.
Yeah. Okay. All right. So we've got about 5 minutes left, and I really truly hope there's a few questions for Huy. I have more if needed, but let's open it up for questions from the audience.
Based on your comment regarding the requirement of 20% social housing for each developer, there's sufficient profit margins? As I understand it, there's a cap on the profit margin you can make on social housing. Does that incentivize or disincentivize the local developers or foreign developers to develop their own social housing aspect? Or it's better or more efficient for them to outsource to maybe Singapore or other countries that have a lot of social housing? And that's my main question.
You can't outsource it. Reason being is the moment you outsource it, the cost that you acquire that land, we also have to transfer with the premium that you get to new landowners. Well, look at the social housing business. Your profit margin is capped at 10% with the current regulations, right? You cap at 10%. In return, you don't have to pay for land use fee. But then what is the cost of infrastructures? You need to connecting that land, that particular land, to the existing infrastructure of the government, right? Who built the roads? So it's not being factored. You didn't get the land for free. You compensated for the land. But that wasn't counted for the land use fee. So what I'm saying here is you're being capped at 10%, but there's a lot of expenses are not being accounted for. So that's why this incentivizes developers to develop social housing. And that's why the government is saying, if you don't do social housing, why would I give you the permit of doing the commercial part of it? So outsourcing it is very difficult because how much you're going to sell it to me to do it for you while the profit is capped. So it's not that easy. So fortunately, there are the directions of the government in the draft of the new housing law is that they want to take control of developing the social housing by waiving the requirement of the 20% dictate in the project of yours, but collecting the land use fees from you, and then they use that and zone it somewhere else and build the social housing themselves. So government is the best developers for social housing because they know who is qualified to buy.
It's like a social housing tax.
Yeah.
Okay.
Yeah. And they should be the one who's building it instead of the developers.
I'm sorry. I have a follow-up, and I'll get that later.
Thanks. So as a follow-up questions, we look at China market. One of the biggest issues that causing problem in China is because they do a lot of this kind of pre-funding business model. You can sell it before you build it, and there's no control over the cash, unlike in places like Singapore, where when the buyer buy, all the cash for the project is trapped within a project account, right? After this crisis, is there any thought or is there any view by the Vietnamese government that whether they should change the law and regulations to kind of move it into a more project cash control kind of business model rather than the current more free, pre-funding, developer get to use the cash where it see fits?
Understand the questions? You're exactly right. The pre-funding model will allow, the pre-funding model without governance will allow developers to do evil things. But here, even though we don't dictate the money that being pre-sold from the client, but the bank actually indirectly helping the client or the customer to manage the money on their behalf, because every project have bank loans for constructions. And when you do pre-sales, that money have to go into the account of the developers that managed by the banks. And in order for you to sign an SPA, the developer have an obligation to provide a bank guarantee to the customers before you obtain the sales license. So even though we are in the pre-funding models, but we are having governance over it in terms of the use of the money. And that's why you can see that there's no protest in terms of the home buyer who pay for their home but never received the home itself. Only when it happens is because you're buying something that's not even the SPA. So there's a few examples in the market similar to China-like, But the majority of the pre-sales are along the way and being managed by the bank as well.
Well, our time is up. I just wanted to say thank you so much, and thank you very much for your questions. So appreciate it.